Hello from Topeka. I'm Marley Carpenter, your KSCPA lobbyist. Friday was the last day for non-exempt committees to meet for the 2023 legislative session. Last week was a frenzy as committee chairs churned through bills and worked quickly to wrap up their business for this year. This week, House and Senate will be on the floor Monday through Wednesday, followed by conference committees and floor action, leading up to first adjournment, which is scheduled for April 6th. The House Tax Committee passed a comprehensive tax cut bill, House sub for Senate Bill 169 last week. This bill is estimated to cost the state roughly $500 million next year and $1.37 billion over the next 3 years. It contains several provisions that were considered separately this session. The bill moves to a single income tax bracket of 5.25%, exempting the first $6,150 for individuals and $12,300 for married couples. The bill increases the standard deduction for individuals in tax year 2023 from $3,500 to $4,000 and adds an annual cost of living adjustment to the standard deduction starting in tax year 2024. The bill fully eliminates the state sales tax on food as of July 1st this year, but does not impact local taxes. The bill also repeals the current non-refundable food sales tax credit after tax year 2022. The measure also increases the property tax exemption from $40,000 to $65,000 for the state's 20 mills of property for school property taxes starting in tax year 2023. The bill removes the current cliff on Social Security income and phases it out by increasing the $75,000 threshold gradually over 4 years. The bill also reduces the privilege tax for banks from 2.25% to 1.625% starting in tax year 2023. Finally, the bill cuts corporate income tax rate from 4% to 3% in the APEX program after 2 projects begin construction. The full House is expected to debate their plan next week. The Senate has passed a different tax plan last month, and the 2 plans will be discussed in conference committee once both chambers have weighed in on the bill. The SALT parity technical cleanup legislation also saw action this week. Senate Bill 313 passed the Senate Tax Committee. This measure amends the SALT Parity Act, which clarifies the determination of taxable incomes of an elected pass-through entity and provides for the passing through of the tax credit to the electing pass-through entity owners. The SALT Parity Act, as we know, was passed last session, and clarifying language is needed for the credit to be interpreted as intended by the Kansas Department of Revenue. The Senate bill was amended to add Indiana language to allow a choice for taxpayers by adding the word "or" to the bill. An identical bill, House Bill 2465, also passed out of the House Taxation Committee this week, but does not contain the Indiana language. We expect both bills to run on the floor this week. In anticipation of this language passing, tax preparers and taxpayers have been asked by KDOR to hold off on SALT filings until after additional guidance and a worksheet will be posted on the KDOR website. We will keep you updated on all of the information from KDOR. If you have any questions or need additional information on any of these tax issues, please contact myself or Danielle at the KSCPA office. Thanks so much, and we'll talk to you next week.